So there's not very much that we can do to affect labor force growth, although there is a tendency in a strong job market for people who may have become discouraged and dropped out of the labor force because they felt there were inadequate job opportunities. There is some tendency for people to rejoin the labor force and to get employment. And we have certainly seen that in this recovery. Now, unfortunately, the underlying trend in labor force growth has slowed substantially. The most dramatic impact comes from the baby boomers entering the retirement years. And although more recent cohorts of retirees are working more and participating in the labor market more than earlier cohorts did, still there is a marked drop-off in labor force participation when people reach the retirement years. So the growth in the labor force is slowed. And I would say that at this point, immigration actually contributes a substantial amount to labor force growth as well. So the population growth with these demographic trends and immigration are the main ones shaping labor force growth. And that's part of the reason why our economy, it looks like its potential to grow at this point, unless there's a pickup in either labor force growth or productivity, looks to be in the neighborhood or maybe a little bit less than 2%, which is really lower than we're accustomed to by historical standards.